Alright, welcome to the weekend video. It's Friday evening and it's time to put my thoughts not onto paper but onto video. And I will aim for this to not fall into the worst produced market video on the internet this weekend. So we'll try and up the quality slightly. So this week I think I might just go from daily charts down to give a little bit more perspective. And hey, let's get my little scribbler up and open there. Again, it's been it's been one of those kind of consolidation weeks, and they're always hard to deal with. Okay, so yes, ignore that. We are up and running, and this is the daily count here. So this is a large B wave top that was way back when in early 18, and we've traced out 5 waves down. Thinking about it, again, you could probably put this wave 1 low here at this previous ending diagonal low. Suffice to say, it doesn't really matter. We've got 5 waves down, whether you would count it into here and this all as a third wave, or whether you count it to the point where it is right now. And we had this ongoing kind of second wave correction for a good while now, let's say since November. So gosh, we're closing in on 4 months of sideways action, and it's kind of like what they say: if it hasn't rallied, it ain't gonna. So there's the caveat here of a larger second wave in play, but I kind of don't favor that for the moment. But for now, it's still there. That's the daily count anyway. So we're moving down into a large degree C wave to the downside. So okay, that's wave 2 high for the moment. Had what's called a leading diagonal right now into wave 1, and kind of a corrective sideways 3 wave pattern in wave 2, filled out a nice trend channel, and we've been leading lower since then. So I've kind of favored the 1-2, 1-2 scenario, and maybe this is a 1-2 again, but you could also say that this would be a kind of 1 and then an expanded flat wave 2. So we'll see if that wave 2 high holds next week. We've rallied this week, but again, it's most likely more corrective than not. Okay, so that's the 4-hour chart. Let's get into the hourly chart here. So I'm calling it a 3-wave rally. This action here does not suit a third wave. I think it suits a C wave better. We've kind of stumbled at the highs here, the previous fourth wave, forgive me, which is in about the same as the 61 or 62% retracement there of 1326. So we've kind of stumbled around this level, and we've failed to break out over the last couple of days. So I still think that wave 2 most likely is coming to an end, and we should move down into a third wave. So we've still got 5 waves down here, and so far 3 waves up. So next week we'll be looking for a lot more excuse me, downside action to rule out this alternate kind of expanded flat wave 2. In general, the upside action has been more corrective, and the downside action has been more impulsive. So sticking with the thesis, the long-term thesis, I think is pretty solid. It's finding that short-term inflection point is where the hard work is. And that's where I'll take all the flack. That's life. Okay, move on. This is cable. Go to the daily chart there. Looking at another ending diagonal in cable, and that'd be a C wave. So this would be an ABC with a C wave ending diagonal. So we'll get into that's wave 1 and 2 anyway. Let's get into the 4-hour chart. So we're going to look at that C wave of wave 2 and you can see how that might work out. 5 internal moves, each of them can be viewed as 3-wave patterns. So we've got 1, 2, 3, 4, 5. We've got this kind of narrowing range, internal 3-wave patterns, 5 moves. We hit a kind of a spike high up near the upper trend channel there, and so far we've kind of drifted off that high. It doesn't mean that it's complete just yet. We could still probably hit again up around 134.20 maybe early next week, and then drop from there. But I think this C wave as an ending diagonal is most likely the best way to interpret that action off the B wave low. It's been a horrendously hard correction to follow, and in that I'm pretty confident that we could call it because of that, we call it a correction. So a correction to the upside will be fully retraced in the next move down. Okay, so this is the hourly chart. You can see here where this final C wave might make one slight new high to touch that upper trend line again. You can go wave A up, maybe 3 waves down, and wave B, and then that kind of bounce off the B wave low could be seen as wave 1, 2, 3, some sort of 4th wave, and then wave 5. So you could be talking 1, 2, 3, 4, 5 up in wave C. We haven't broken that new high yet, so for the moment it hasn't been confirmed. If we break 133.80 again, touch that upper trend line, and then fall again, yeah, I'd be quite happy with that. And then try and identify an impulse wave off that to work lower into wave 3. Okay, so that is dollar yen weekly. So we'll move on to dollar yen weekly. I was going to do the daily chart. I'm not sure when we can view. Yeah, weekly chart works better. So you can see that it's a large ABC correction to the upside within a trend channel there. We've been moving off that possible B wave low. We've got 5 internal moves there, each of 3 waves, so we're moving up off that, B wave low into a large degree C wave. The most bullish outlook here would be where wave A wave C would reach equality with wave A, and that'd be up around the 145 to 150 level. And that's a long way up right now, so that's what we're kind of working into at the moment. Change the wave count today because of this corrective looking upside action, and I'll get into that on the short-term chart. But for the moment, it was a series of 1-2 waves up, and now I think I can be pretty confident to say that it's wave 1, 2. It's broken down into 2 sets of impulse waves. So wave 1, 2, 1, 2, and with wave 2 yet to finish. And I'll show you why I changed this week. So here's the hourly chart. You can see that's the wave 1 high. That's the wave 1 in orange. You can move off that wave 1, 2, 3, 4. Type of running flat wave 4, and then wave 5. So 5 waves up in a lower degree wave 1. And now we had this wave A of 2, and the action off the low, while I was expecting upside, it just wasn't developing in any way impulsively, so it fitted more a 3-wave rally, so that's why we switched out to the alternate count. And this is the larger wave 2 underway. We've dropped off the high today, so it's possible that wave C of 2 has now begun off today's high. We've got 3 waves up in a small minor trend channel, so we should see a 5-wave decline back down towards support there, the previous 4th wave here. 110.35 is what I've been looking at for the last few days, so let's see if this pattern fills out on Monday and Tuesday, and then we work higher again. Okay, so this is the Dow daily chart. Still working with the idea that we could have a failed fifth wave there. That's the first alternate. It could also be a second wave with wave 1 down. If I zoom out there a little bit, no, that only throws it off. Let's see. If we go wave 1 down, an A, B, C, that could be wave 2. I know it's a kind of a real extended second wave, but that ain't impossible at all. Nothing's impossible in the markets, it seems. Or we could have a failed fifth wave at the recent high, and now we're moving down into a third wave. Or we have a wave A, B, and C, which is the kind of safest count at the moment. It doesn't mean it's the actual what actually will unfold. But either of those three possibilities, I think, will all lead to quite a significant sell-off over the next few months, probably 2 or 3 months. So if we were to take a trend channel there off that high, kind of project something down around the 20,500 again in the Dow over, let's say, next 2 or 3 months, towards the end of May, middle of June type of thing. And that should happen in 5 waves anyway. The only way that we'll be able to differentiate whether it's the even more bearish outlook, because even the more bearish outlook would expect 5 waves down anyway, but if we get a 3-wave correction and then a further break, that'll trigger that alternate, even more bearish long-term count, and then I think we're away to the races down in a new bear market, a new depression most likely. So kind of pull up your socks on that one and prepare yourself. Okay, so that's the daily chart. Let's get down to the 4-hour chart. You can see that's the 3-wave pattern. At a minimum, a 3-wave pattern expected to end down around the 20,500 level, with a minimum targeted break of 21,460. That'd be the previous wave A. So that'd be the minimum expected decline for wave C of 4. And there you can see there's the 2 alternate counts, either wave 5 or wave 2. And I have to say that the level of bullishness on display, it's like as if nothing has ever happened. And you can only surmise from that extreme bullishness that we are at least a very significant turning point. Okay. Let's get down to let's kind of pull out what's happened recently and see if we can make any sense of it. Today's market kind of declined initially off the open, and then we've had a spike to a new high again. I was kind of thinking yesterday that maybe this was a contraction triangle B wave, but given what's happened today, it could possibly be another ending diagonal C wave. So we've got an A wave up, B wave down, and maybe a kind of a 5-wave internal move there of an ending diagonal. If we get another sell-off again, let's say before the close or early on Monday, then we could probably favor the fact or the idea that wave 2 is in, and we should expect a further decline in impulse wave. But for now, you could probably call this. Let's open out the possibilities here a little bit. You could probably call this an A, B, C down and some sort of B wave, and then a move down into a C wave. So you could probably call it a flat. So far, this action here doesn't sit well with an unfolding impulse wave again. But like everything that's happened over the last few months, I should probably not underestimate the ability of the market to just extend in bullish oblivion, and that's kind of what that's how I'm viewing this market right now. Because of the fact the larger degree charts are showing or calling for a quite a significant decline, I'm transferring that onto the shorter term chart, and the shorter term chart is kind of sporting the most bearish possibility right now. So hence the reason the idea of an impulse pattern to the downside. And if it's confirmed by another smaller degree impulse pattern, well then we can get pretty you can get busy working your way into the market on the downside next week. Okay, let's see the Dow. Let's move on to gold. Then we go for the daily chart. Okay, so I'm working on the idea of a large degree third wave up. You can see here on the daily chart there is an alternate count, which would, that's wave 1 up, and some sort of B wave, and then maybe a failed C within a large degree wave 2. So again, we could be just fulfilling wave 1 up here of 3. So that's something to keep in mind on the longer term. Still pretty bullish on gold, obviously. We have the other idea here of a very large prolonged triangle off the, when was that? The August 16 high. We've come to test that kind of upper trend line again, and we haven't broken it just yet. So the main aim would be for a break of that 1370 or 1380 high there, just to rule out the idea that that's a triangle. But for now, we've kind of sold down off that declining trend line again, so that's something to kind of keep in mind, or I most definitely have it in mind. But I'm still preferring the bullish outlook. Okay, so that's the daily chart. Let's get into the 4-hour chart. We could have wave 4 completed here. Here's the idea for the moment is wave 1, 2, and then a third wave unfolding. Wave 1, 2, 3, maybe wave 4, and wave 5. The move off this wave 4 low is interesting because it could well be the beginning of wave 5 up, and we will go into that now in a second. But that wave 5 of 3 would be, it wouldn't surprise me to break that. You can see that. Well, actually, let's go back here and let's get a trend line in there at that 2016 high, 1375. So I wouldn't be surprised if wave 3 broke 1375. I would actually expect it, to be honest, before correcting again. So let's get down into this possible fourth wave and see what's occurring. Okay, so there's the hourly chart. That's the wave 3 high. You can the way I've labeled it is wave A down, triangle, wave B, and wave C unfolded in 5 waves. And the move off that low is so far a pretty decent 5-wave pattern. I'd expected a rally up above that B wave. It never came. Yesterday we sold off pretty sharply, and then we're kind of retracing higher again today in possible wave B. So we could be working on another 3-wave correction here in a 1-2 pattern, and if that's the case, well then we've got a bullish signal next week if we get a slight new low which holds above the previous support here, that 1280 level, and we turn higher again. That'll be a pretty decent bullish signal that wave 5 is underway. The alternate view on that would be that we get some sort of maybe a new high in a 3-wave pattern, and then we're filling out filling out some sort of trend channel in wave 4 in a larger 3-wave. And again, the other idea would be that this is wave A of 4, and maybe we do some sort of triangle. Maybe we continue to contract over the next few days, or sorry, that would be the next couple of weeks most likely. If that's the case, well then if this does unfold in a triangle, I think the bullish case just gets the bullish case adds or gains momentum or gains significance, I think. Okay, so that's gold. The outlook next week would be for at least this small impulse wave to complete, and then a move up in a possible fifth wave. Okay, so let's go to crude oil. Here's the daily chart in crude oil, and that's the previous October high, way back when in October, when we were looking for that touch of the trend line and wave 5 down to begin. We got that touch of the trend line, and we got the beginning of wave 5 down. Okay, so for now we have a nice corrective bounce off the wave 1 low, and I'm looking at the idea of a completed wave 2, but we could also see a larger kind of three-wave pattern unfold over the next, well, it'd be several months if that was the case, if a larger kind of let's say a flat or something unfolded in wave 2, and then you'd get the turn down into wave 3. But for now, I think we've probably reached the highs of this corrective rally, and we should probably look lower into a third wave now. And I'll go into the reason why on the short-term chart. So that's the daily chart. Let's get down to the 4-hour chart. And here we are again. That's that previous high. We worked down nicely in 5 waves. And I think we could have 3 waves up in A, some sort of 3-wave pattern in B, and then maybe an ending diagonal wave C. It would surely account for the excessive amount of overlap. And we do have a 5-wave kind of move with a break, wave 4 breaking the wave 1 high. So again, we're just looking at the completion of a C wave, I think, and with at least a fall back into previous support there, which would be at 42, that wave 1 low. If wave 2 was to create that larger pattern that I told you, with A up, B down, and wave C, well then wave B would at least hit that 40 again, and then rally in wave C. So we'll see. For now, I'm looking at wave 2 complete, and at least a retest of that previous wave 1 low. Okay, so the hourly chart. We sold off today early, and now we've rebounded back. I mean, we could break to a new high here, and maybe this pattern here will be some sort of a 4th wave, and then we'll push higher into a 5th wave. We'll see. For now, we'll go with the idea that maybe we're topping in, this is quite a small degree anyway, so it's hard to pinpoint exactly what the final the final top of the final bar in an hourly chart. It's quite a hard thing to do, so that's what I'm attempting to do. And you can see here, well, actually I'll talk about this ending diagonal here. The ending diagonal would expect one last high up towards that upper trend line in it again. And if that was the case, then we'd probably break that 50% retracement level there. You see the 59.60, 50% retracement of wave 1. Pretty standard retracement in wave 2, and then a touch of the upper trend line would break that 50%, hit $60 again, and ringing of bells and clapping of hands and all that sort of great adulation and and celebration if that were to happen. The ending diagonal wave C would show, you see a 3-wave pattern in wave B here. We have a possible ABC up in wave 1, ABC down in wave 2, an extended ABC in wave 3, and then an ABC in wave 4, and then AB, and final move up in wave C of wave 5. And we'll just have to see, play it by ear, and see how this 5-wave pattern in wave C unfolds later today and early on Monday. Suffice to say, I think we're closer to we're like touching within arm's reach of the end of this second wave. and ever since the lows of that spike low there back in on Christmas Eve of 2018, we've been looking. Let's clean you up there. Get rid of you. We've been looking for this second wave correction to retrace at least back to that previous triangle. We broke the upper bounds of that triangle, and now we're extended towards the end of this correction. We're right back at the 50% retracement, and we've got a decent pattern in wave C, and all we need now is an impulse wave lower to kind of call the end of that rally and move significantly lower again in crude oil. And it is, again, pretty typical that right now, the calls are for, they're some extreme bullish calls, but the calls for $70 oil again are all over the place. And I think that'll be the main reason why you won't see $70 oil. Okay, let's get on to the S&P, which is the S&P and the Dow are pretty much two sides of the same coin right now. The working count that I have is this ABC decline in a possible fourth wave, and the idea of a failed fifth wave is still quite prominent in my mind. And if we do break to a new high, well then that'll trigger that fifth wave alternate count, and we'll work from there to the downside. But the lights are flashing, and I think given the fact that we've had this horrendous rally and great if you're a bull, terrible to endure if you're a bear like me, a perma bear like me. We're right back at that the previous highs, that 28.16 level again. Broke out 28.28 today, so I think the risks are pretty ominous to the downside, and we should pay attention to it. Okay, so this is the 4-hour chart. That B wave high obviously takes a new precedence tonight. Haven't shown the alternate wave 2 high, but that's still a very large possibility. With a minimum outlook for a decline in a C wave in wave 4, back down to the mid 2100s again, maybe below that on an overshoot. And again, the same thing holds for the S&P as for regards to the triggering of this alternate count. Okay, so this is the hourly chart. This corrective action yesterday did suggest that we would get a new break to a new high today, and the upper trend channel line here is suggesting somewhere up around 28.47 to 28.50 to tag that upper trend line and then move down. We'll see how the cash chart works out. Maybe that was a triangle wave 4, and we're moving up into wave 5 of 5 of 5 of C of either B or of wave, or either wave 5 or wave 2. There's both of those other alternate counts. The trend channel again is filling out, and like I said with the Dow, I think the long-term risk is most definitely to the downside, and it's just a matter of kind of tracking those hour-to-hour moves as we move closer to this point to see if we can get a turning point. I think the turning point should be pretty glaring when it does happen, and the reason I am so damn bearish is because the long-term risks are so damn high, and that's why I tend to concentrate on the bearish potential of the short term right now. Okay, so let's move on to silver. Silver daily chart. Let's pull that up into play. Again, silver, I'm working on a third wave up. it'd be a pretty large degree third wave up, so that's wave 1 and 2 down, pretty complex second wave there, and we're moving off that low in a 1-2 pattern again. So let's get into the 4-hour chart. You can see that I've marked that as an expanded flat. We could also call that wave the wave 1 high, and maybe we're tracing out some sort of larger zigzag maybe. So we could go 5 down, ABC, 3 up, and then 5 down again. I do like the idea that this expanded flat reached the 50% and bounced in a nice kind of impulsive short-term pattern. And I don't think that short-term pattern is over just yet. So let's get down into the hourly chart. So there's that wave 2 low. Again, lower degree, you could call this a wave 1 and expanded flat wave 2. The reason why would be because this internal movement here looks like a 3-wave move up. So we're expecting a decline at least back to like the 1530 level. And we've got a punch below that in a possible second wave. But the move up today has been pretty encouraging so far. So we'll work with the idea that the wave 2 low is in. And let's see if we can kind of build a larger impulse pattern back up to the recent highs over the next week or so. And if we do build a nice 5-3 pattern to the upside, well then that'll be again another bullish signal for silver over the coming months. So that's silver done, and this is treasury again. Today we got another bounce and another sell-off up to that upper trend channel line. So what I'm mainly working on is this 3-wave correction higher in wave B and with a wave C down to follow. Yeah, the decline off that previous high, the previous tag of that upper trend channel line, did not work out as an impulse pattern lower, so it's some sort of 4th wave. And then today's high should be seen as wave 5 of C. Again, we push lower. So on the longer term charts, I should have started with a long term chart, but take that aside. Looking for a B wave to fill out, and then a rally up in a wave C to complete a second wave. So for now, we're pretty well. I suppose we're pretty agnostic in terms of momentum, but we have reached an extreme again at this B wave high. So we could be moving and turning off that into a C wave. So the 3-wave idea should unfold in wave B over the next week or so. We just need to turn off that off this trend channel again, with the target for wave C down around the 12 or 120, maybe 120.50 level to complete a C wave down. And that, I think, does it. Have a great weekend. It's St. Patrick's weekend over here. St. Patrick's Day Sunday. So the Irish holiday. Everybody's Irish on St. Patrick's Day, so enjoy it for a day. I have to suffer a lifetime of it. Okay, this has been me, and hope you have a great weekend. God bless. We'll see you on Monday evening again. Have a good one.